coffee. All right, let me get some coffee and we'll get on with it. Oye, Javi. I'm doing great. So, all right, let's go. I think it's working. Hang on. Oh, yeah, I got to look over there. Yeah, it looks like you have sound. All right, yeah, let's get on with it. Whoa, 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 whoa. Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble. Focus on the long term, never risk money you cannot afford to lose. Hey man, my name is Wayne. Welcome to my office. So, I'm a currency trader just like you. I've been doing this for, 20 years? And I can't get this done. Been doing this for 20 years. I like macroeconomics. I like trying to... Does anybody know how to do this? I can't get the button. But I do this 20 years, but I still can't button my own shirt. Look at this. It's ridiculous. Anyways, no, I'm not going to be able to do it. Anyways, it'll drive me nuts. Anyways, been doing this 20 years. I like to figure out why the markets are moving. For that, I do macroeconomic research. And then once I've developed a fundamental bias, then I use technical analysis to confirm and deny the bias. And then, if I'm a bull, I like to buy dips in an uptrend. If I'm a bear, I like to sell rips in a downtrend. So that's it. That's all I do. That's how the Wayne do. So if you want to learn how, just ask questions, get involved, and I will do my best to help. I am here to serve you. I want you to succeed. It doesn't hurt me none if you succeed. So why don't we succeed together? If you could, would you click the thumbs up button? Tell YouTube this is quality content. If you are new, maybe subscribe. That would be great. Cool. And there are many resources out there that are associated with my work or I've developed on your behalf. So like Investor Bootcamp, for example. If you're like, Wayne, I like how you roll, man. I like the way that you set up your trades. Pay the $88. Even if you know everything, pay the $88. Chip in, kick down, come clean, don't be a holdout machine. But dude, there's 100 hours worth of training. You might learn something you don't know. Who knows? Learn how to plan your trades, swing trading for 300 pips, Forex basis, principles of price action, introduction to Forex trading, the guide to MT4, MT5, central banking essentials, day trading methodology, understanding macroeconomics, oil investing fund. Like, dude, let's just look at this macroeconomic one. Actually, I won't be able to get into that. But anyways, it's like 16 hours long. It's really hardcore. Yeah, I mean, I think you go right into GDP, and I tie GDP into dignity, human dignity. So we dive right into the Fed, we dive right into the IMF. I will blow you away. You think you know econ? Try that course, right? So anyways, $88, well worth it. I priced it ridiculously cheap, so it's accessible to everybody. What else? How about tradersway.com? Yeah, check it out. Traders Way, the foreign exchange broker. It's the one I use all day, every day. They're good. They're really good. You should check them out. They're good. I recommend them. Give them an opportunity to earn your loyalty and respect. They earned mine about 8 years ago, around the time when the Swiss National Bank blew up major brokers around the world through their lies. But it turned out when the tide went out, you found out who was nay-nay. In this case, major brokers around the world were trading against their clients, and they got caught when that singularity in the price-time continuum blew up. Trader's Way was perfectly fine, and that proved to me that they actually have an ethical business model. That's it. That's it. Reality is why I like Trader's Way. They actually do what they say they're going to do. TradePlans.ai came up. You should check this out. You upload a trade plan. It just takes you a few seconds. So you can do stocks. You can do Forex. You can do crypto. Okay? Put in your entry, your target. Oop, there's an error there. Your stop loss. Upload a screenshot of your trade plan. Hit submit. Boom. You get feedback. You get a second opinion on your trade instantly. It takes about 3 seconds to get it into your email box. It actually is done faster than that. It will blow you away, the detail of the feedback. So imagine, this could almost replace your demo account. Think about it like a demo account, like learning how to golf. What if you went to the driving range and you don't know how to golf, and you grab a club, you grab 100 balls, and you hit 100 poor shots in a row? What if you hit 1,000 poor shots in a row? What if you hit 1 million poorly swung, poorly hit golf balls? Will you get better? Probably not. Now, what about using TradePlans.ai in combination with your demo account? Every time you think about taking a trade and you want to get some feedback, right? Take your trade on your demo. Great. Plan it out the best you can. Your entry, stop, your limit. Think about your technical analysis the best you possibly can. And then put that trade plan into TradePlans.ai and get in a second opinion. What does Aiden, our AI is called Aiden. He's becoming a person. Aiden was born a couple of months ago. So Aiden is learning. And Aiden's pretty good because I taught him how to trade. So Aiden could also give you instant feedback on that trade. Did you look at this? Did you look at that? Did you think about this? Did you think about that? And it's an amazing way to learn how to trade properly. And it's free. Now, speaking about that, it's only free because I'm paying for everything. So if you have used it and you think it's amazing like I do and you share the same vision, would you please kick in? Kick in a couple of bucks. I'd appreciate it. I'm trying to get 10,000 bucks of my cost covered. And right now, $231 toward my $10,000 goal. Look, I'm dropping real money into this. So if you like my vision, will you please help? Okay. So thank you to Denise and Adam and Maida and Jim for their contributions. I appreciate that. Every little bit helps. It also shows me that you give a damn and you care, and that I should keep going. The next step for Aiden is to give you risk management advice, not just trade setup and technical analysis advice, but trade management advice as well. So anyways, TradePlans.ai, super cool. Quant Box, you should try out Quant Box. Oh my God. Okay, this is a way to automate your macroeconomic research. Seriously, if you believe the news and the trend in news and the flow of money around the world impacts the assets you trade, if you even just have an inkling that that is true, that there's more to trading than just technical analysis, if you want to know why the market's moving, you need Quant Box. And the cool thing is when you become a subscriber, everyone gets a macroeconomics training course, and you also get a training course on statistical analysis, so you actually understand all the amazing information Quant Box shares with you. For example, Quant Box tells you the projected inflation and interest rates for every major central bank around the world all the way out to 2025. Where do we get that information? From the central banks. So when you hear the gurus on TV and they say they think this, their outlook is that, what they should say is this is what the Reserve Bank of Australia has actually told us. If you want to know facts, Quant Box will blow your mind. Blow your mind. Blow your mind. All right. So what's up? What's up? Let's go. Let's go. Oh, looks like I got some Swissy. All right. Let's look at the stock indices, or in this case, currency indices. And what do we have on the long run? A lot of weakness on the Aussie. A lot of strength on the euro. So Aussie's facing challenges from their trading partners, aka China is struggling, so that's reflected in the value of the Aussie. In fact, not just the value, but the demand. Okay? Ojo doesn't have TradePlans.ai Swissy. All right, maybe let me take a look. Well, let's go into the dashboard. Oh, nice. Oh, Ethereum? Very cool. I'm going to look at this. See, here's Ethereum. That's a lower low, so I'm going to disagree with that. What is this? Oof. USD CAD. Sell. Too early. It's hard on that time frame. Daily. That's too aggressive for me. No. Sorry. Okay. Posted trade plan. Forex Swissy. CAD Swissy. So what do you want? USD Swissy, is it? See, there's too much crap on here. I'm going to yell at the developers. See, the developers, they don't know. Here's your USD Swiss franc. They don't know the difference between a Noki and a Polish Zloty. So there's too much crap here. No, but there's a lot of Swissy. Oh, you want Swissy yen. Oh, sorry. And see, they have everything backwards here too, which is fine because Ada doesn't care one way or the other. So yeah, I'm going to have to yell at them. I'll go through this. I have a meeting coming up with the team, but no Swissy yen. Maybe that has to do with our providers. Swissy, China, Mexican peso, Polish Zloty. Yeah, I guess not, huh? It might be backwards. You might want to look at yen Swissy. Let's see. Did I go past it? Yeah, it's just a bunch of crap nobody cares about. Okay, I'll have that fixed. Look, the important thing is we have the data, right? We have the data. So, but anyways, yeah. Yeah, good call. Thank you. Kiwi, Swiss franc, sell. Yeah, I agree with that. Right? See, notice all these trade plans are anonymous. I'm just providing feedback. Ooh, beautiful chart. Look at this. All right, what is this person thinking? Down, 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 up, up, down, 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 up, 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 down, down. So range. There's a range here, and then breakout of the range after a higher high. I wouldn't project that way. I'd have it less than that. It's weird. So I only like somewhat agree, but generally disagree with that. So I'm going to say no. I'm addicted to this. I can just sit here for hours. I mean, look, you can learn how to trade by seeing how everybody else trades, right? All right, so it's a higher high, higher low, 146. Now, I don't know what asset this is, so I'll have to double check. Looks like these are daily pivots. So it's a little day trade, but then up into here, M5 to R3? No. Well, so again, I partially, the first part, yes. The second part, no. But I'll generally agree, but that's not quite right. That's over aggressive in my opinion. But it's not, I mean, I can't predict the future. I would just say it's not wrong. No, I think I already did this one. By the way, some of the upgrades, you notice that there's timestamps. Anywho, I could sit there all day. Maybe I will. Maybe I will. Fine, fine, good, great, fine. All right, so anyways, just watching dollar here. This is the Dixie. And we're at this important price along the way. So I want to observe that. Check some other things. What else is going on in the world of Euro? Just free and clear plan there. Remember, that has everything to do with the ECB and what they're doing. Pig. Oh, why isn't that not updated? Great British Pound Index. Just double check the settings here, indicators, just because that was off. Yeah, pound, that's correct. Let's take a look at the Great Big Pig. Same thing, like, you know, yeah. Yeah, well, just pay attention. Kiwi. Okay. Now let me get you, oops, wrong one. Hang on. YouTube.com/ is it gonna work? No. Quant Box. Oh, I know it. Stupid. Browsers are so stupid sometimes. YouTube.com/Quant Box. I'm not going to go over it today because in this live stream, because I've already gone through it in a previous live stream. So if you'd like to know my economic outlook for the week, it's here. Where'd you go? Now I've lost the chat. There we go. If you want to know my economic outlook for the week, in fact, it's almost like the economic outlook for the month of September. It's right there. So I'm not going to go over that today, so you should already know some of the things I'm thinking. Just measuring here on the way down. Some pretty basic technical analysis. Okay, so that's climbing and that's falling. Swissy doing what Swissy do. Yen generally weak. And CAD, okay, CAD maybe finding some support? What do you think? Huh? Maybe working its way up from here? Any thoughts on that? Cool. All right, so let's start our analysis. Let me know how I can serve you. What asset should I cover next? Let's do, what do we want? Let's do a commodity. XAU, WTI, Bitcoin. What's left? Gold, oil. I guess we can do XAG. All right, let me know what you want to cover next. Which one on Hal for the kitty cat that I just drew? Since the bottom, August 17th. Oh, yeah, I guess I could have done S&P. All right, yeah, let's redo it. Yeah, because that sucks. All right, let's redo it. Boo, Wayne. Redo. Redo. Yeah, let's do that. XAU. Struggling today. XAU, WTI, BTC, and SPX. There we go. Thank you. Redo. Good morning, Johnny. All right, come on, guys. Let me know what you want. You might actually get it. All right, we have enough votes, but it's neck and neck. Get your last votes in. It's neck and neck. S&P 500 versus gold. S&P 500 versus gold. Going once. Going twice. Boom! Gold, gold, gold. Let's do some gold. All right. Zip over to the commodities. Gold for the win. Boom. All right, let's go on a 15. Okay, 15-minute. We don't have a lot of direction here, but I can move this if I can grab it. I don't know if I can't even grab that box. Anyways, I can't grab that box, but I can continue the box. I can just draw another box. Okay, so we got that sort of as support for now, don't you think? Make it just slightly smaller so you can see it. Okay. So look, right now we had that huge volatility. Okay. Huge volatility, but is it an outlier? What it does is it rips apart the standard deviation. Okay. So there's a slight tone to the downside, but there is supportiveness. So it'd be interesting if somewhere along the line like this holds. I'm just guessing on slope and all that kind of stuff. But again, I'm looking at this low and extending it over. And I'm looking for US dollar weakness because I'm looking for risk on. Greg says, does AI understand human events? Right now, Aiden focuses on technical analysis. Okay. There's limitations to a lot of the analysis. So like, there's two things going on. There's at least two different AIs that Aiden uses. Think of it as left brain and right brain. So when you post a trade plan, Aiden looks at tens of thousands of candlesticks. Okay? And that's all it sees. And then when he sends you an email, he thinks about it verbally. And not just verbally, but contextually. So like if you're trading gold, he'll want to talk a little bit about gold as gold, not just as a technician, but just gold. So there's left brain and right brain. Now, does it understand human events? That's quite different, but over time, Greg, let's say over the next couple of years, it won't. I don't think it can understand like a human event, but it'll start to understand patterns of human events. So it won't understand your humanness or the humanness of behavior, but it'll recognize the pattern of the aggregate of human behavior. You know what I mean? So does it really understand it? Well, understand is a big quote unquote word, right? But could it give you statistical probabilities of how a human would likely handle an event if it saw 1,000 events similar? Yeah, but it's just figuring out probabilities, right? It doesn't actually understand. Okay, it'll understand as much as you teach it, but then it'll under the rules. So, like, does a computer understand how to play poker, or does it understand the probabilities of the next card based on the rules that you gave it and the number of cards presented and the number of cards in the stack? You know, all of a sudden, does it really understand, or the probability of it? Now, the next side of the AI would be if you were teaching it poker to understand not just the probabilities, but the randomness. Okay. And then you would say, how does the randomness and the probabilities impact how humans play the next card, not just what the probability of the next card is, right? So there's the idea of chance and randomness, but then also the irrational behavior of humans. So you can get better and better and better and better. If it's 1 million people play 1 million hands of poker, could the AI get really good? I wouldn't want to compete against it. Okay. But anywho, let's go back to this. So that's gold on a 15-minute chart. On a higher time frame, you can see what I'm doing is I'm basically playing a double bottom. And I'm using Quant Box to analyze 20 years of data. And the 20 years of data tell me I have a reasonable probability of this soon or now. Okay? Okay? Well, so that's, those are contracts, right? On the futures exchange in the United States. But also the other thing, Ashish, and if you watch the Quant Box Outlook, the weekly outlook that I did today, I talk about this, like there's a plausibility that central banks start entering the gold market again. In particular, countries that are facing economic contraction. So is it China? Is it New Zealand? Is it Australia? You know, or are people buying it for a hedge? So you're watching some institutions. And also remember the difference between retail and institutional very often is described as dumb money versus smart money. I like to think of it as short-term money versus long-term money. So, Ashish, you know, if gold is up 12,000 contracts, and by the way, Quant Box shows you this in the Commitment of Traders report. So this is what a Commitment of Traders report looks like on Quant Box. Okay? And so you can look at these things and look at the change in gold. Okay? See, you can see here. Of course, that's an old report, but nonetheless, you can see long versus short visually, so you can very easily see it. The thing is, what is the outlook for gold? And if you feel like inflation in the future will be higher than it is now, then you want to own gold. If you believe the narrative that what the Fed has done will kill inflation further, then you want to sell gold. Okay, Ashish? So some people might say, you know, let's say PCE. Like we know PCE deflator comes out this week on Thursday, right? Everybody knows this, right? And so if you believe PCE will be down on Thursday, then you can short gold. But what if you thought, in general, most of the disinflationary stuff has already occurred, and that maybe in the next 2 or 3 months, inflation stabilizes again, let's say based on oil. So if oil is up, some inflationary pressures remain. So gasoline prices are high, which is inflationary. But then retail sales will remain high because a lot of retail sales have to do with how much gas you buy at the pump. And gas prices are sticky, or let's say gasoline demand is sticky because even if gasoline prices go up 40 cents a gallon, you still need to drive to work. So you're going to pay, your retail sales will go up by 40 cents a gallon because you're going to buy it even at the higher price. So all of a sudden other things starts, you know, that inflation returns. And if that is your narrative where we went from 10 to 3.5 and now it's going to linger between 3.5 and 4, in particular if oil is going to go up to $100 a barrel, then you want to buy gold. You understand? So which one is right? How the heck would I know? I don't know the future. But there are things that you could be doing that might help you decide whether there's risk on or risk off at the end of the year. This is one play. And this play is risk on. So what I would want to see as a bull is I want to see, okay, a move like this to there today. Okay? And in fact, if I expanded this out, I'd like this to go, right? Maybe it takes 3 days, but I'd like for this to happen. Is it going to happen? Oh, I don't know. How would I know that? I don't know the future, but I know what I intend. And if I know what my intent is, I will recognize when things are going terribly, terribly wrong. So if we're down through like the 4 hour 55 or below this channel, I'll know to bail on it. So right now I'm riding the 21 on the 4H. I'm fine. Okay. Daniel wants to know some of the reasons for risk on. All right. Did you click that link that I posted, Daniel? Watch the video later today. And I answer that question. But here's another way, Daniel. Here's a fun way for me to answer it. In January, I did an annual outlook. Okay? How many people here attended the annual outlook in January? Anybody? Now, Angel says, tell me if I projected it correctly. Gold somewhere to blah, blah, blah. Post it to tradeplans.ai. Angel. Okay? Yeah, lots of people did. What I said was, this week here, I would buy gold. In this week here, I would buy the stock market. In this week here, I'd buy the yens. In January. I know it's the third, that was the third week. This is now the fourth week of August. Okay? Okay? Is that true? How many people would say that's true? That I would look to be risk on in the third week of August? True or not true? In January. Yeah, cool. Johnny's like, for the fourth year. Right, but, right? Cool. So, I don't know if this is going to go up, but I know what my intent is. Okay? I know what my intent is. Okay? So, I don't know. So, I'm trying. I'm tiptoeing. Okay? I'm tiptoeing. So, you can see higher high, higher low. Like this is plausible, right? Okay. Now, Frank wants to know if this is structural inflation that's going to be around for a very long time. There's two schools of thought on this. The answer could be yes. Frank, yes, that inflation will never go away, by and large, meaning it'll be here for a very long time, like decades. But it depends on what countries do. Okay, it depends on what, and we could end in a massive disinflation. And it's almost the same, Frank, like the same probability that we have persistent high inflation. It just never really goes away. And that could be from things like nearshoring and a contraction in global trade. That could be. Or another equally plausible way is that we plunge into like somewhat of a depression, a global recession that lingers for a while too, because like, let's just pick on the United States. We all know what the problem is. The U.S. government, not the central bank, the U.S. government spent $5 trillion on COVID, and it was way, way, way too much. So all we need to do, all that Congress and the Senate and the White House needs to do is raise taxes and pay down the debt by $5 trillion. That's it. The Fed added $5 trillion. They've almost removed $1 trillion, and they have $4 trillion to go, and they will do it over the next 10 years. So the Fed has already removed $1 trillion. The federal government hasn't done a damn thing. So the problem won't go away. So we'll either have persistent inflation, or the persistent inflation plunges us into depression. Not depression, that's overzealous, but let's say, deflation. The stock market drops 30%, never recovers, for example. And unemployment goes to 5.5% over the next 3 or 4 years. Okay, that would lead to disinflation, or even worse, low growth and high inflation. And the federal government won't be able to raise taxes anymore because no one will be making money. But instead, while there's a boom, they're not raising taxes. So, I mean, the federal government's really screwing up from an economics point of view. If you just studied Keynesian economics and the government's like, oh my God, unemployment is a historic low and inflation is high. Oh my God, what do we do about this problem? Dude, you raise taxes and pay down your debt. It's so blatantly boring. Like it's fifth grade economics. So if you don't do it now when times are good, when the heck are you going to pay down your debt? When things are bad and nobody ain't got no money and because they've lost their jobs? No, it's the incompetence that have already screwed things up. So that could lead to, like I said, high inflation and structural, meaning it never goes away, or a deflation because everybody loses their job and demand for everything falls. So that's aggregate demand. Or the worst case scenario, okay, low demand and high prices. But remember, the high prices come from the fact that there was too much money. That's the government's mistake. So at some point, in my humble opinion, the U.S. government has to correct its own mistake. Otherwise, it's just gross negligence. Okay? Gross negligence. And easily fixed. What do you do when you have too much credit card debt? Well, you do two things. You either work really hard, save your money, and pay it off. Pay your credit cards down. That's prudent. And if you do that, you fix your credit and because you are a trustworthy, honorable person. Or you just default and your credit is worthless and you'll linger in poverty for the rest of your life. So what do you think the U.S. government wants to do with its credit card debt? Pay it down, be honorable and trustworthy and creditworthy because you actually live up to the obligations you assumed, or default? Okay? So there you go, Frank. Long answer, but we don't know, and it's one of the two. Either structural inflation or sticky disinflation or even deflation. And deflation's harder to get out of. Because like once you jack up your credit card, because credit is too easy to get, and once you spend all your money, because money is free, once you run out of this resource, what do you do when prices are high and you have no money and you have no credit? What do you do? Yeah, Anthony says we got fleeced with the pandemic. It was just a wealth transfer. Well, inevitably it works this way, doesn't it? Somebody that has no money suddenly needs money. So the government just collects money from the wealthy, or worse, and this is what happened. Worse. The government borrows money from foreigners and then gives it to poor people for free. The poor people spend it. And how does that work now? So this is a transfer. The country borrowed money. Bad idea, by the way. So they just put it on a credit card. So now they have some cash. They used they went to an ATM but withdrew money on their credit card, not a debit card, a credit card. So they borrowed money and then they gave it to people for free. They needed it. Maybe not as much as they got, but they needed it, so whatever. And then they spent the money on rent. Well, guess what? Whoever the landlord was now has that money. Or they spent it on food. Well, now the grocery store and the shareholders of the grocery store get that money. A lot of it went to food and beverage. So some people went to the bars and restaurants. So some of it went to the waitress and some went to the cook, but some went to the owner of the Applebee's and the landlord of the Applebee's store. And eventually it goes around and out. So this is why rich people get richer, because they own stuff. When you own an asset, you get paid. You make money while you sleep when you're a rich person. But you know, rich people don't spend their money. They invest their money. And so eventually everything will do it that way, right? The only way, Anthony, to break that cycle is instead of spending your money, you invest your money. Money is easy. Now, it's hard when you start with zero. It's hard. Don't get me wrong, that part, starting, is hard. But the mindset, the key to money is the mindset. Because it's easy to say, oh, well, it's easy for rich people because they have money. And then with their money, they make more money. But you still have to start. When somebody says, I can't save money because I'm only 25, I'm going to wait till I'm 35. And then you're like, well, I can't save money when I'm 35. I'm getting married. I'm going to have a kid. And I still don't make much money. So then you're going to wait. And then you're like, I can't save money when I'm 40 because I need a bigger house. And then I can't save money for retirement because, and all of a sudden you're like, you're 55 and you're late. And you're like, now I need to save money. The thing is, it's the mindset. If you don't do it at 25, you're not going to do it at 45. And that's the whole thing with money. So you start in the beginning. You start in the beginning. And even if it's only $50. So like, did you know, how many people here know Jim Cramer from CNBC? Mad Money. Did you know he was homeless? Living out of a car? For months and months and months and months and months. And then he lived in his sister's apartment, slept on the floor or the couch or something. And then he went somewhere else. Like he was homeless for like a year. But he said he still saved $50 a month in a mutual fund. And God dang it. Dude, the tenacity of that. It's that mindset that will probably lead to success. Well, now he is filthy stinking rich. He became a partner at Goldman Sachs. Or at least a director. I think he was a director. Okay? Well, so Daniel, right, he said, my first salary went to buy FX Bootcamp. Well, that's the whole idea, right? Where you need to invest into assets. So a couple of $100 doesn't usually buy you much of an asset, right? But are you an asset? Is education an asset? It's not. It's an indirect asset, isn't it? But are you worthy of investment? It'll work down the road, right? Richard said he ran down a hedge fund making the wrong bets. You know what? Whatever, dude. It's all part of the game. It's hard being a professional investor, and it doesn't always work. It's a tough gig. So they built, see, the thing with the hedge fund is there's a rationale to the hedge fund. And the rationale of the hedge fund may have changed. So it may have worked for a while, and then it didn't work for a while, and money left. That's normal. Okay. But anyways, guys, going all the way back to what we were talking about. Investment. Yeah. And transfer payments eventually go to owners. So instead of getting all mad like, oh, the system is rigged and the rich get richer and the poor get poorer, then how about, like, what did Trump say in one of the debates? You guys remember this? When he's like, of course the system's rigged. Of course it's rigged. This is why I play the game. He's like, it's rigged. We all know it. So I take advantage of it. The system's rigged. Get in the system. You guys remember you remember that? That was like 6 or 7 years ago, but you remember that? He's like, of course it's unfair and rigged. Right? So you might hate Trump, but that was funny, right? So just then play the game. So how do you go from how do you go from poor to rich and rich to wealthy? Going from poor to rich, you have to invest in yourself. You got to get side hustles. And all that money goes back to investing into you, building credit, building knowledge, building reliability, building reputation, building your skills. Right? That's how you go from poor to rich. And what is rich? Well, you make a lot of money. So if you had 3 jobs, you're going to make a lot of money. And then go to night school on top of it. Take some of that money because you're rich and invest it. So that your side hustles make more money than the old side hustles. So I don't care if you're trading crypto and you're doing drop shipping on YouTube on Amazon, and you're flipping some houses, but your side hustles get bigger and bigger and bigger. You used to babysit, now you flip houses. But great, so now you have a lot of money, but you're just rich. You have a lot of income, but you're only rich. Lawyers are rich. Doctors are rich, but they work 90 hours a week. They're poor. They're poor meaning they have a lot of money, so they're rich, but they exchange their time for money. So you have money, but you don't have any time. So the next thing, once you have a lot of money, what do you do with your money? You buy a TV? Poor. Buy a fancy car? Poor. Buy a watch that's $1 million? Poor. Poor, 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 poor. You have a lot of money and you have a lot of shit. You got a big ass TV, but you're poor. Now you have to work because you want to show off. So you buy a really, really nice house. And you have a really, really nice car. And you go on fancy vacations because you want to look good on Instagram. See, I think our new world is not run on greed. Remember the 80s? Greed is good, greed is right, greed is work. You know the world we live in? Envy, envy, envy. You can't be happy like the Instagram model. She's happy, but you're miserable. So, hey, get a super fancy house, get a super fancy car, wear a super fancy watch, go on super fancy vacations, and guess what? Now you work day and night to pay for all this crap. You are poor. I don't care if you make $1 million a year. If you spend $1 million a year, you're poor. Oh, but you go on the best vacations. You wear the fanciest clothes. Yeah, you're not happy and you're poor. So how do you go from rich to wealthy? And it's that transition we were talking about. Well, if you invested in your education and your mindset and you've had all these side hustles, you know the value of money, then you start you take all your money and you don't spend any of it or very little of it, and instead you invest. You invest. You invest into Forex, you invest into crypto, you invest into real estate, you invest in the stock market, you invest in the bond market, you invest into real estate investment trust, you invest into venture capital, you invest. This is what wealthy people do. Now, you could make $1 million a year and be poor, and you can make $300,000 a year and be wealthy. Do you guys know the difference? The difference is you don't trade your time for money. You don't work for money anymore. Do you understand? You're not digging in the dirt looking for coins. You want more money? Spend more time digging in the dirt. You understand? Like, even if you're a lawyer making $500 an hour, you're just digging in the dirt looking for coins. What if you woke up in the morning and you already made $1,000? Every day you wake up and you're like, well, I wake up and the first digit on the clock is a 4, by the way. What if you woke up and you already made $1,000 for the day? And it's the same every day, 7 days a week. Now you have to ask yourself, can you survive on $30,000 a month? Some of you can't. Some of you, that's what you make in a year. The thing is, you can get to that, and it's only math. It's only math. Okay? It's only math. You need, let's say, just conservatively, $3 million. And you can make $1,000 a day doing nothing. Because you have $3 million in assets, and in particular in cash. Now you're like, Wayne, that's ridiculous. How do I get $3 million in cash? You start when you're young, and it's easy. Okay? Now, here's the thing. Let's say you get a bunch of side hustles. You're young, and you do a bunch of side hustles, and you get really good at being a business. And you invest into your education, you get experience and knowledge. And all of a sudden, you're in your 30s and stuff, and you're starting to make okay money. You're becoming rich. You're making decent money now. The thing is, and here's the difference. Do you spend your money on the stuff, your Instagram model stuff? Do you start buying nice clothes, nice watches? Look at me, I have a BMW. Or do you say, I can't think about that stuff until after I've budgeted my reality? And you say, I remember what Wayne told me, that if I can save $3 million by the time I'm 65, I can make $1,000 a day while I sleep. And I can do it the rest of my life, 65, 75, 85, 95. Not a problem. Okay, great. So what is that going to cost me? And let's say you're in your mid-30s and you're making $8,000 a month. You got to pay your taxes. The government takes their money first. Are you going to pay yourself, by the way? Do you want to pay yourself before you pay the government? You can. You have a retirement account. And you know what? It'll come down to like $1,200 a month. I'm just grabbing at straws here. I'm guessing. If you're in your mid-30s, you're making $8,000 a month, $6,000 a month, whatever. And if you've invested in yourself and now you have a career and your company actually pays you, has a 401k and they match you, oh my God, it's so easy, right? So all of a sudden you're chunking in there $1,000 a month, and you get an employer match. It reduces your taxable income. So you actually pay yourself before you pay the government, then you pay your government, right? And then if you could save some more, you're probably going to have $5 million by the time you retire. So let's say $1,000 comes out of your paycheck, and then you pay taxes, and then out of that you put in another $1,000 a month. Now you're telling me you're serious as a heart attack. Dude, you're going to be able to retire at 59 and a half, not 65 and a half, and make $1,000 a month. Or sorry, $1,000 a day. Because of the extra $500. And then you look at it, and you got money for food, you got money for rent, you got money you can put towards vacation. You have to save it, and maybe you go on one decent vacation a year, but if that makes you happy, it's just a budget, and you can afford it. Just save now $300 or $400 a month for a year. Now you got a $5,000 to go on a vacation once a year, but you would have to budget. But see, you won't budget if you don't have an education. You don't know how to budget. You don't know why to budget. And you don't understand like the $1,000 coming out of your paycheck and then the extra $500 you do after your paycheck. So now you got a Roth and a 401k. And you know, mathematically, you just type in the numbers, 59 and a half, you'll have $4.325 million. And earning 8 to 10% a year, you got easily $1,000 a day for the rest of your God-given life. And when you die, you'll give $4 million to your children. Or you just stay poor forever. And forever. And ever and ever. And your children will be in the same. And your children's children will be the same. Right? Think about how about this? In 20 years, if you paid rent right now, you rent a house, you rent an apartment, what will your rent be 20 years from now? Higher or lower? Anybody want to guess? 20 years from now, what will your rent be? Higher or lower? How much higher? And will it be higher than your salary increases? Will it be higher than inflation? These are all variables. Even if you make more money, your rent might go up. You might make 2% more every year, but the inflation to your rent might be 5% a year. But year after year after year after year, so 20 years from now, per your income, you might pay 50 to 100% more, right? My mortgage will be exactly to the penny, exactly the same, assuming I have 20 years left on a mortgage. Think of the calmness and the peace and the stability of being wealthy. But I drive a used car. I didn't buy a new Porsche. I can't afford that. I'd have to make $10 million a year to afford a brand new Porsche. Oh, but I see people driving them all the time, brand new. I bet you they don't make $10 million. Oh, but I'm impressed. Good job. In a market with free money and easy credit, somebody could afford a $120,000 brand new car. I'm like, dude, if you compounded that at 10% a year for 20 years, that car cost $1 million. Am I that stupid? Oh, mama didn't raise no fool. I'm not stupid. I wouldn't pay $1 million for a Porsche. That would be stupid. So I'm going to wait for it to depreciate 80% or 60%, and then I'll pay cash for it. Why? Because I'm astute with money. Huh? Money is math. And math, people are afraid of math. Also, here's the other thing about the culture I grew up in. You're never allowed to talk about money. Well, how are you supposed to improve if you're never allowed to talk about it? Okay? So anyways, I don't know how we got on this, but look. Poor to rich, rich to wealthy. It's a straight process. Most people can't do it because they're unwilling or incapable. I grew up poor. I understand how complicated poverty is, how inconvenient poverty is. It's hard. I grew up with one parent. You're like, well, it was difficult on my mother. And maybe psychologically, I'm like, my daddy doesn't love me. And all my friends have daddies. How come I don't have a daddy? I don't know. Okay, maybe that holds me back. Maybe it motivates me. You have to walk to school. Why? Because if your mom drove you, she either didn't have a car or it was a rust bucket. I got funny stories. Okay? You got the old shoes, the ugly clothes. Great, you have to work and go to school. I had 2 paper routes and worked hockey games. Okay? But back then I was rich. So when I was 13 and 14, I had 3 jobs. Why? I wanted to be rich. I hated being poor. Does anybody like being poor? I hated being poor. We didn't have real TV, so like I didn't want to be a sports star. I didn't want to be a rock star. I didn't want to be an Instagram model because that hadn't been invented yet. But I did want to be a businessman. But I didn't know anything about business at 13, but I knew I needed 2 paper routes and I needed to work weekends at hockey games. And I was flush with cash. So I became rich by the time I was 12 or 13. I made probably $150 a month in 1980. Rich. So I bought myself an Italian bike, so I had the nicest bike in the neighborhood. I went to school and I had gold mechanical pencils and pens, gold. Mont Blanc, right, with gold. 14 karat gold. That kind of stuff. I remember times when my friends didn't get Christmas presents. My presents were modest, don't get me wrong, but I had money, I was rich. So I told my friends, find something in the catalog. I remember doing this. It was probably, I remember 5th grade. I bet you it was 5th grade. I had my friends go through catalogs. It's probably a Sears catalog. And I said, pick anything out here. One day I will buy it for you because I'm going to be a millionaire. I went to the poorest school in my city. So later on in life, and I'm still learning, I realized money isn't enough because what happens is it's hard. It's hard to make a lot of money because you have to keep giving up your time. It's hard to wake up at 4 o'clock in the morning and deliver newspapers in Saskatchewan. The paper route had to be done. I had 2 paper routes. They had to be done before 7 a.m. And you had to put the newspapers in the mailbox. But there's 4 inches of snow and it's negative 30 Celsius. That's difficult, but I loved the money. Working till 11 o'clock at night when you're 13 is hard at the hockey games, walking up and down the stairs, up and down the stairs. You go to the gym. I go to work. People go to the gym and they're walking in their spandex and drinking their power water. Look at me, I'm drinking smart water. Only costs $4 a bottle. What are you, stupid? So anyways, I had a job. That's where I got my workout. Well, up and down the stairs. Coca-Cola, get your ice cold Coca-Cola. Only $1, get a Coca-Cola. But I had money, honey. But the thing is, if we have, most of us are probably there where working is hard. So you got to go through a period of you need to work even harder, find other ways to make more money so you can invest into yourself and then invest into assets that produce income for you so you don't have to work hard. If you're blessed to still be young, work your ass off now. Double and triple down. I haven't had a vacation in 6 months. Screw you. Work for 3-4 years and then go on vacation. What do you mean? Your vacation. How much vacation time do you have here? Right? Can you imagine at a job interview? How much vacation time you have? You have as much as you want. I'm not going to hire you. Go back to the unemployment line. Right? Defer your pleasure. Make wise choices. Hustle while you can. And then take all that knowledge because you've invested in your education or you've learned the ropes by working so much hard. You're getting 3 times more experience than someone else your age if you have 3 jobs. Right? Then you take that money and you start accumulating assets. And now you're on your road already. You could be 30 and on your road to being wealthy. I know 30-year-olds, okay, grew up, let's say, in the countryside of Georgia. And not because of like money that's falling out of the sky from their rich parents. Their behavior in their 30s, they own a modest house, they have their first child, they've been married for several years, and they're saving money like crazy. They're on their way to being very wealthy. I can tell by their behavior in their 30s that they're going to retire wealthy, and money will never be a problem ever in their life. And probably that little child that, I don't know, she's probably 3 years old now, she's going to retire, not just wealthy, but live a stable, consistent life. I used to sit down with my mother and she would discuss money with me and she's like, we got $8 for the week. We got to buy food with this and we also have to decide which bills not to pay this month. We have the water bill that's due. We have the power bill that's due. We have the phone bill that's due. And I can afford 2 of them. So which one are we not going to pay? And then how do you want to allocate the $8 for food this week? Those are some pretty powerful conversations to have with a child. And so this child I'm talking about, living in rural Georgia, has parents that have already built a stable life. They own the home, have a mortgage. They're saving most of their money, putting money aside for that child to get an education, putting money aside for their retirement in the future. They might not have a lot of money for vacations, but they're only 30-something. You don't need an Instagram vacation when you're 30. It's not a vacation if it goes on your credit card. You know? All of a sudden you work for your master card. Have you ever heard that saying? Why do you call it a MasterCard? Because you put money on this card and now you work for them. Jiminy Cricket, you pay 22%, maybe 25%, maybe 27% interest rates on a vacation? That's not a vacation. How could it be a vacation if you can't afford it? What were you doing to need a vacation? You know what you need is an education. If you work that hard and you don't make enough money, you need an education like Investor Bootcamp, like Forex.Today. We talk about money. I guess we need to move on to some other trades, but here's gold. Cool. Look, I can't lose money. I can't lose money on this trade. So how do you do this? Well, you need an education. And it's more than just a double bottom. If I can predict this 36 weeks in advance, and you're like, dude, that's like magic. No, it's not. It's not magic. It's knowledge. It's experience. I've been doing this for 20 years. My hard work has paid off. It was an investment. I also went to Harvard for 5 years. It only cost me a Lamborghini. I don't have a Lamborghini. I have an education. Which one's going to be worth more in the long run? Not the Lambo. Okay? Ashish says, why can't we add Wealth and Financial Methods course to the Investor Bootcamp? I'm going to do that. I'm going to do that. Okay? Not a problem. I will do whatever it takes to serve you. You are my Nobel Prize. It's us working together every day. I don't want to be like every other YouTube guru. I was the first one, by the way. Check it out. Can you find anybody on YouTube that has a Forex video older than mine? My first Forex video uploaded to YouTube was within 6 months of YouTube even becoming a service. There is no YouTuber that's been doing this longer, and I had already been doing this for years before YouTube was invented. This is my give back. You're important to me. This community is important to me. I want this to work. So Ashish says, we should do a personal finance course. Yeah, let's do it. Okay? I just want to make the point that you don't have to be a rocket surgeon. You don't have to go to Harvard. You don't have to have anything but tenacity and drive, but then focus your energy and your money. So I have had side hustles since I was 11 or 12 years old. I've purchased all my school supplies since I was like 10 or 11. Because we didn't have money for clothes. We didn't have money for pencil cases and binders. I bought those. You want a nice bike? Get a frickin' job and buy yourself a nice bicycle. That's how my reality was. So at 10, 11, 12, and so on and so forth, okay? That's where I started, where get a side hustle. Oh, you have one paper route? Get 2 paper routes. Oh, you want more money? Work nights. So that later on in life, in my 40s, I can say, oh, I'll be a Forex trader. I'll be a husband. I'll be a father to 2 children. I'll run an education business. And I'll go to Harvard. Full time. But I can handle that. I might not always be stellar, but I know how to work my ass off. I know what a ridiculous, sickening work ethic is. because I learned it at 12. But that's part of the education, isn't it? They show Lambos. Well, here's my Lambo. Look at that, a 100-year-old watch that I saved from the Ukraine war. Look at that. Ridiculous. But who cares? Okay? But who cares? It doesn't mean anything. We need to go from poor to rich, rich to wealthy. And I was rich at 12. Now, my mother gave me a place to live and provided food. So I got all that covered. That was free. And I had more money than I could possibly spend at 12. Now, I wish someone had pulled me aside at that age and said, let's talk about stocks and bonds and real estate. Like, well, look, I grew up poor. We didn't have that kind of education. But my mother was smart with money. I learned to survive. That was an education. And I got more education over my lifetime through experience. It's possible. It's all plausible, guys. Okay. So we did gold. Oh, we didn't do the S&P 500. No, or did we? Which one did we do? I think we did gold. All right, let's do S&P 500. So 36 weeks ago, and I'm guessing, I don't remember if it was 36. But anyways, in January, I said I would buy the stock market. Well, I should be careful. In January, I said I would look for a rally in the stock market between the third week of August and the third week of September. This is the third week of August. We're now in the fourth week. This is the fourth week, right? You see? Still August. So on the third week, I said I would look to be a bull in the stock market. Oh my God, I'm long. I'm long, Bubba. I'm long. Yeah. So I do what I say and I say what I do. So I'm long and there's my entry. So I'm long at a double bottom. And I don't know what the future holds. But again, if you do the Quant Box, okay? If you do the Quant Box video, and I think I still have it on my clip, on my board. Can I paste here? Paste? Yeah. If you watch this, okay, I talk about what to do this week in anticipation of a of a rally. Okay? Okay? Now you understand this, like, well, how about this? I hope you understand the correlations. I hope you understand if all I did today was analyze this chart, you would have 7 or 8 or 9 different trade plans. You would look at this and say, euro dollar up. You would look at like euro yen up, for example, right? USD Mexican peso down. Okay? So let's take a look, let's flip over and do the yens here. Okay? And so what I'm hoping for here, if the S&P 500 goes up, then we have a higher high, higher low. I bought it, and now we're up. Okay? Now to put this into context, we're up, consolidate, triple top, down, double bottom, higher high, higher low. So today should be up, and then consolidation, and then maybe up by the end of the week. It could be jolts. It could be PCE. It could be NFP. Could be ISM. Could be ADP. Damn, boy. Could be a lot of different things, right? Think I'm missing one in there too. There's a lot going on this week. So again, I covered it in the video, the Quant Box video. There's a lot going on, but if some of it goes my way, okay, I'm going to have assets that are appreciating. Very cool. That'd be nice if that worked out. I tried a little long earlier today. We had some data out of China of potential stimulus. So the Chinese stock market was up 1% today. So I'm long right there. And I would like to survive this pullback right here. So there's some uncertainty going into the stock market open, which is in 4 minutes. And what I would like for today is a rally for the day. If not, I'll break even. Don't cry for me, Argentina. I'll move my stop. What else going on in the world today? Yeah, well, let's look at exotics. Okay, there's that peso. Danger, danger. Remember, I shorted this at 17. Okay, so now we're at support. So what's next? Technically, you would expect something like, like this, right? That would be a risk off. And I only say that because you would anticipate this as sideways, right? Now, if we move into a risk on world based on seasonality, that is not going to be the narrative. In fact, what I think would happen is we would have an out of position September, okay? A pullback to here, and then actually an S3, and that's not even on the charts. And that's down to 16. Well, it's actually just below 16, 15 and 3/4. Okay, so what you would see is down, okay, and then out of position, little pullback, and then down. Now, how do I get that? That doesn't make any sense technically. No, but it does fundamentally, actually specifically seasonally. Now, I haven't actually looked up the seasonality of this particular pair. Maybe I should, but as far as seasonality of risk on, risk off. Jim, I like that. If you can't get it done in the first 24 hours, work overtime. Yeah. But there is this point, though, right? There's this point, like, how do you get out of the poverty trap? And the only way I know is work really, really hard to earn money. You need money. You can't be rich with no money. So you work really hard, 2, 3, 4, flip everything, sell everything, save everything. And then take money and educate yourself. Somewhere between an $88 investor bootcamp course to a $100,000 Harvard. Somewhere in between, right? Like, but you actually have to have knowledge. You have to be able, like, if I explain a spreadsheet to you and we plan your future, or we talk about budgeting, you have enough of an education you can follow that. Not just follow it, do it. Like, the education isn't knowledge, by the way. Harvard doesn't tell you I'm smart. It does tell you I'm not stupid. But it also tells you I'm a tough son of a bitch that gets shit done. Well, that's what education tells you. You're consistent and reliable. You can't accidentally get a Harvard degree. It's way too hard. Okay? So it does tell you I'm consistent and reliable. Well, isn't that what you want in an investment manager? Well, what about getting a job that pays a lot of money? What does the employer want to know? Are you consistent and reliable? Do you get shit done no matter what? Yeah. So you need that. You need that track record of success. Even if it's an online degree, at least you have a degree, and it shows that, you know, you tell your employer, like, okay, I didn't go to Harvard, but I did work nights and weekends to get this degree while I did a full-time job and while I raised my children. And all of a sudden you're like, dude, you're a tough son of a gun. Sweet. That's the kind of person we want working at our firm, right? And you start building all this track record of success. But at some point, because you know how hard it is to do, you start investing your money wisely so that you don't have to do this. Because really, from the wealthy people I've met, like generational wealth, certainly not the people I grew up with, but I've met a lot of people with generational wealth, and they don't even have the concept of working hard. That's an impoverished point of view. Farmers work hard, but they're not necessarily wealthy. It's a tough gig, and there's an honor to it. And welders, and bricklayers, and people working in retail, and childcare, and taking care of the elderly. That's hard work, and it's honorable work. It's hard being a fireman. It's hard being a police officer. But they're very rarely wealthy. But it's hard work. The next thing is if they can save, this is why we have retirement accounts, if they're able to save and their employers match and people maintain personal budgets and they put money aside for the future needs, not just for your comfortable retirement, but for cancer. Are you saving for cancer, right? And in the future, you don't have to work hard anymore. You've done enough. At some point, your money says, you know what? You've done enough. But there are people that are taught from a young age because they already have some money and they already have the education, primarily from their parents, and then later on, because their parents had money or saved money, they're able to go and get a good education. Then what happens is you're taught that working hard is not the primary methodology of wealth. It's working smart and doing big things. Okay, so you see these creeps that go to Harvard, get their MBA at Harvard Business School, and then all of a sudden they're working on Wall Street, working as an investment bankers or hedge fund managers, and they're making $3 million a year, and you're like, but that guy's a creep. He's a jerk. He's an a-hole. Yeah, but he's doing smart things. And he's doing big things. He's managing $1 billion and makes, $3-4 million a year. And you're like, but I could do that. Yeah. But you could, but you got to get there. And what you see is these families with money, I mean, there's hard work, but there's smart work too. Like investment banking isn't easy, by the way. Running a hedge fund is not easy. I know investment bankers. I've known them for 3 or 4 decades. Dude, these guys work 80, 90 hours a week, 100 hours a week. But they make $500,000 to $5 million, depending on how long you've been doing it and your role. So I don't think it ever gets easy, but at some point, what you do needs to be bigger than digging in the dirt. Right? But that's for your kids, I think. So anyways, you can get there. This is solvable if you take a long-term view of your reality. You just have to reshape your existence, reshape your reality. Let's see, we did commodities already, didn't we? Bitcoin's not going anywhere. We don't need to do that. Well, let me ask you, what do you want to do? What do you want to do next? Next asset. Let's do one more. Great British Pound, Euro, because I did Euro Yen, but that's all right. CAD, and we'll do Aussie in case you're interested in that China news. All right, last one. Oh, and my WTI. Well, I'll pull that up now while you guys answer that one. So that'll be the next one. Commodities, my WTI. So I was on this on Friday, and this big spike down knocked me out. So now I may have missed my opportunity because I was doing this webinar, but I am a bull on oil, and I do want to buy in those moving averages. In particular, I probably want to consider 4H first, and it's yeah, I'm climbing, so I might have missed it. Shoot. So I was long on Friday. I got taken out on that drop, and this is the trade plan currently. So I'm going to trade it like an inverse head and shoulders. I'm going to drag this across, and then I'm going to drag this as a neckline, and then I'm going to measure the distance from here to here. Okay, and then I'm going to take that distance, so we'll call it 78 to 81. So that's 381 to 84. So we're probably going to get it about here, which is supposed to be the distance from here to here. Okay, and that gets us basically to a top. Okay, now my longer term outlook is I wouldn't be shocked, let's say it that way, if we're at $100 a barrel by the end of the year. And in that case, guess what? Inflation is up. I would expect GDP to fall. Nominal GDP is Y. In that case, my gold will appreciate and I will make money, and I'm already long gold. Also, the S&P 500 would be back to the all-time high, and I'll be making money at that as well. Meanwhile, all my yen pairs will be up, and I will be making money on those. And at some point, if this zips up to the upside, I will be selling dollar across the board as well. So I'll be short dollar, I'll be short yen, I'll be long commodities, and everything should be right as rain. Okay, let's do one more. $36 on euro, so I guess interesting. All right, so let's just do euro dollar. Okay, that's funny, I got this mistake. I wonder if it's updated somehow. Okay, that's not a dollar index. Let me check. Oh, it's interesting. It's the old one too. Interesting. Object name. Anyways, whatever. I'll deal with it later. All right, so uptrend or downtrend? Downtrend. Okay. Cool. Too early. The plan that I would look for, remember, look for it. It's not an opportunity yet. It's a theory. This is what I'm going to look for this week. Okay? Now, if I was a pure technician, I would just sell the rally. I would sell now. Okay? If I was a pure technician, I would just sell. And that might actually be the case. I'm not telling you not to sell. Telling you, if you look, technical analysis says down. What I'm suggesting with the upward arrow is, what if it did this week? The next week, next month, I would look to do that. Has it done it? No. So what does technical analysis tell you? Down, 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 up, up, sell. Okay? Down, 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 up, up, sell. Down, 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 up, up, sell. Look, it's all predictable. Down, 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 up, up. Sell, bro. Look. But it's the time of month. No jokes. Okay? That suggests, well, maybe if it were going to flip, the time of month and the price seem to be right for it. Well, it hasn't happened yet, so you might as well sell, but that's up to you, son. What's your outlook for the dollar? By the way, if you were selling euro dollar, you're almost certainly on the wrong pair. If euro dollar falls, oh my God, are you not on Kiwi? Are you not on Aussie? Have you looked at pound? Maybe pound's strong today, maybe it's weak, but like, oh my God, really? Like, if you're going to do this, you got to check the other ones out. Why? Well, have you done a relative strength exercise? Let's just do one now. Let's see what happens. Let's go to Aussie. Okay, let's look at Euro Aussie. Okay, does that look like Euro is stronger than Aussie dollar? Yeah. So why are you selling Euro dollar? Why aren't you selling Aussie dollar? I mean, come on, that's an uptrend. What the heck? You're on the wrong pair. Do a relative strength exercise. If you believe this pair is going up, then you should be not selling Euro dollar, but selling Aussie dollar. You see? You have the right idea, you're doing technical analysis, you're just betting on the wrong horse. And you can do better than that with some basic research. You don't know this stuff? Investor Bootcamp is $88. Also, before you take a trade, try tradeplans.ai. Seriously. Do it like a demo account. Plan your trades the best you possibly can, and then see what Aiden thinks at AI, tradeplans.ai. See what Aiden thinks about your trade plan. Get some feedback. Get a second opinion. Learn while you trade. Don't just trade. If you tread water and never learn how to swim, eventually you will drown. Okay? So, firing off 10 trades a day on your demo account will not make you a better trader. Sitting here day after day after day, firing off trades will do nothing but reinforce bad habits. If you want consistency and confidence in your life, learn as you experiment with your demo account. Ask Aiden. It's free, dude. It's free. Ask Aiden. And he'll give you feedback on every single trade. Takes seconds. Like, it's instant, dude. Come on. Trade. Try it. Make a difference. Change your life. See you tomorrow.